back to the channel, everyone. One of the most undervalued companies selling in the market right now, Lululemon, currently selling for a $24 billion valuation at $200 per share. Pretty much the same price it was selling at during COVID times. The stock hit an all-time high of $491, currently down almost 60%. This thing is getting crushed. Today we'll talk about why I believe this thing is undervalued. Lululemon is not going anywhere anytime soon. Lots of emotions happening in the market, a combination of tariffs, slowdown in the revenue growth, and they really just haven't been innovating or releasing new type of clothes lately. I feel like the brand has died a little bit. There's been some increased competition from Alo, Viore. Let's just take a look at the website real quick. What's new and trending? There hasn't really been any innovation. They've just been changing colors. They did recently just get into the new shoe category, but I don't think it's been a hit. I honestly don't know anyone who owns Lululemon shoes. It just hasn't been a hit. No one's talking about it. They sell mules now? I didn't even know Lululemon sells mules. So one of the main things is competition. You have Alo, who a lot of the girlies have sort of shifted to. There's been a lot more celebrities who are pushing this. And then you also have Viore. Viore has been pushing more men's clothes. And I feel like people just don't want to pay for the prices that Lulu was charging anymore. So there's a lot of things holding the stock down. Year to date, it's down 45%. But again, when you take a look at the max chart, they have a PE ratio of 13. So super low PE ratio. They're still making a ton of profit. They're still making a ton of cash flows. Earnings are still in there. Let's pull out the balance sheet. We'll take a look at the income statement and cash flows in a sec. But balance sheet, they still have $1.3 billion in cash. So when you go to 2020, remember this is during COVID times, they had about $1 billion in cash. This company is selling at the same price it was selling at in 2020, $300 million more in cash, as we could see right here from February 2020 till February 2025. So the revenue from 2020 was $3.9 billion. 2025, they had $10.5 billion. That is double the revenue they were making in 2020. They also have more cash than they were holding in 2020. And they've had no long-term debt, while the company is selling for pretty much half the price it was selling at just from last year. Lululemon right now is selling for a cheaper price, even though the fundamentals have improved in the past 5 years. The CEO purchased in September, so he was buying at $260 a share. He spent about $1 million. Not much insider buying. Analysts have actually been rating Lululemon as a buy, but we have a heavy hitter. Michael Burry of Cyan Asset Management has been slowly loading on Lululemon. One of his major holdings, 18.5% of his portfolio. His average price is $274. So he's currently down 26%. Looks like he bought 50,000 shares, $10 million valuation. But yeah, we have a heavy hitter, Michael Burry. This is him researching Lululemon right now. He's thinking about how much shares he should buy. Oh yeah, undervalued. Anyways, where was I? Anyways, earnings are coming up soon. Looks like earnings are coming up this week. So it looks like institutional ownership has been dropping. Let's go ahead and take a look at some of the most recent fundamental data. So here we go. Quarterly data pulled up. Total revenue top line is still growing year over year. We have 8 consecutive quarters of total revenue growth. The latest one, they posted $2.3 billion. That is up 7% year over year. So you could see from the past year, there was a slowdown in their growth in the single digit range, while in 2023 into 2024, they were growing at double digits. Earnings per share posting $2.61, up 2% year over year. So it's pretty much flat. Profit margins seem pretty steady. When you take a look at the past 2 years, it's been hovering around 58% to 60%. This is the major factor why the stock has been crashing. Stock prices usually react to the cash flow of the business. And as you could see, when you take a look at cash flow from operations and free cash flow per share, posting negative 119 million versus 127 million. It is down 193%. year over year. And when we take a look at free cash flow, really bad free cash flow. They posted negative $2.25 versus negative 3 cents. That is down 7,400% year over year. This is the major red flag for Lululemon. So one of the main reasons why they are currently posting and being affected by some of the cash flows is because of all the tariffs happening. Over the past few months, our teams have been looking across the enterprise for how we can offset increased tariff rates. And currently right now, they are prudently managing expenses, identifying efficiencies within their supply chain, evaluating the position in the marketplace related to pricing. Our balance sheet is strong with $1.3 billion in cash and no debt, providing us significant financial flexibility. And on the latest report, don't forget, They currently repurchased 1.36 million shares in quarter one alone, average price of $316. Share repurchases remain their preferred method to return cash to shareholders, and we currently have another 1.1 billion remaining on that repurchase program. Again, in the US economy in general, there has been a slowdown. We are currently in a silent recession right now. Consumers remain cautious in the US market, and they are being very intentional about their buying decisions. People are eating out less. That's why restaurant stocks are crashing. They're buying less things. That's why retail stores are crashing. But other than that, outside the Americas, in China alone, they're still growing double digits. Revenue increased 22% year over year. Rest of the world revenue increased 17%. Europe, Middle East, Africa regions. So everywhere else outside the States, Lululemon is doing fine. They also had some recent store openings, so a company who's still opening stores is not going anywhere anytime soon. Denmark and Turkey, they're opening stores, and they remain on track to enter Italy, Belgium, Czech Republic. So 2025 for Lululemon, they are expanding like crazy still outside of the States at $200 per share at a $24 billion valuation, and we have the King Michael Burry buying at these levels. This looks like a pretty undervalued company to me. We'll get an update this week because they are going to be posting their earnings soon. So we'll see what's happening, what their new plans are. But as of right now, just by looking at this chart, this company looks cheap to me. It looks like a steal. Everything will be fine with this company. But anyways, let me know what you guys think. Thanks for watching the video. We will see you on the next one.